Getting a good picture of your financial health is a good way to start on your journey to, financial wealth. But first, we need to kind of dive into what financial health is. And basically, it's just a term used to describe the state of one's personal and monetary affairs. Now, there are many different, dimensions to financial health. The amount of savings you have, how much you're putting away for retirement, how much of your income you're spending on fixed or non-discretionary expense. There's a bunch of different things, right? So I want to start off with trying to understand financial health. So financial experts have devised rough guidelines for each indicator of financial health, but each person's situation is different. And because of this, it's worthwhile to spend time developing your own financial plan to ensure that you're on track to reach your goals, right? And that you're not putting yourself at undue financial risk if something unexpected happens. So, the first thing that we want to do is you need to measure your financial health, right? So, to get a better grasp of your financial health, it's going to help to ask yourself some questions, right? You can just consider this a self assessment of your financial health. So, the first question that we're going to ask: how prepared are you for unexpected events? Right? Do you have an emergency fund? What is your net worth? Right? Is your net worth positive or negative? Do you have the things you need in life? How about the things that you want? What percent of your debt would you consider high interest, like credit cards? Is it more than 50%? Are you actively saving for retirement? Do you feel like you're on track to meet your long term goal? Do you have enough insurance coverage, whether it's health or life? You know, these are just some questions to ask yourself to start trying to measure your financial health and get a good starting point. Okay, well, if these are some of the questions you can ask yourself to measure your financial wealth, well, how is it that your financial health gets determined? Well, a an individual's financial health is going to be measured in a couple different ways. A person's savings and overall net worth represent the monetary resources at their disposal for current or future use. Now, these can be affected by debt, credit cards, mortgages, auto loans, student loans, stuff like that. Financial health is not a static figure. It changes based on an individual's liquidity and assets, as well as the fluctuation of the price of goods and services. As an example, an individual's salary might remain constant while the cost of gas or food, mortgage, college tuition, these all increase, right? Now, despite the good state of their initial financial health, that person's going to lose some ground and lapse into decline if they don't keep pace with the rising costs of good. Well, typical signs of strong financial health are going to include a steady flow of income, rare changes in expenses, strong returns on investments that have been made, and a cash balance that is growing and is on track to continue to grow. Okay, well then, how could you improve this? How can you get your financial health better? Well, to improve your financial health, I mean, you really got to take a hard, realistic look at where you're at. I mean, don't lie to yourself, right? Calculate your net worth, figure out where you stand, right? So this is going to include taking everything you own, such as retirement accounts and vehicles and other assets, and subtracting any and all debts, right? Student debts, credit card debts, stuff like that, right? And don't try to I mean, it's fine if you want to round the numbers and stuff, but like, don't try to embellish any numbers, right? I mean, be honest with yourself. Then, one of the other things that you hear constantly, right? And we're gonna bring it up again because it's a big deal. You hear this all the time. Budgeting, right? You need to create a budget. Now, with that budget, it's not enough to just plan for where you'll be spending. It's also important to take a really good look at where you already spend, right? Are there areas where you could cut back? Recurring subscriptions that you don't really need, right? Cable and stuff like that. Now, it's fortuitous to understand what your needs actually are versus what your wants are. You can use, spreadsheets or mobile apps to help set up a budget, or use the time tested, envelope method that a lot of people use, which you just make an envelope like for a letter for each budgeted item, like groceries, a truck note, stuff like that, and you keep the money that's supposed to go to those in the envelope that it's supposed to go to. One of the major keys to a budget and maintaining your financial health is to stick to your budget regardless of whether you start making more money or bringing in more income. Lifestyle creep, which includes spending more money as you make more money, it can really, really be detrimental to your financial health, right? After you set up your budget and you figure out where you're spending money, where you can cut back, one of the first things that you really need to do is make an emergency fund. Building an emergency fund can materially boost your financial health. Right? The fund is meant to be money that's saved and easily available for emergencies. Car breaks down, lost your job, stuff like that. The goal should be to have about 3 to 6 months worth of living expenses in this fund, right? And this is pretty common. That's what most people will tell you. Make an emergency fund, 3 to 6 months of living expenses. To make sure that you can cover everything you need to cover until you find a new job in case you lose it. Now, with that being said, one of the other things that's really going to help you is paying down your debt. Right? You can use, multiple different methods. The two popular ones, there's the avalanche or the snowball method. Now, the avalanche method suggests paying as much as possible towards the highest interest debt while paying the minimum on all the others. Now, the snowball suggests taking the smallest debt balance first and then work your way up to the largest. Of course, each one has pros and cons, right? But you should pick the one that works best for your debt and your money handling preferences, right? Everything's different for each person. Well, there's a couple of different tips and tricks we can talk about for all this. Because when it comes to effective personal finance, keeping your financial health in tip top shape, it's not really that it's not really that easy. I mean, you might get caught up just living. Now, there are some few tips that we can talk about that's going to help you improve or keep you in good financial health. One of the big ones is to automate your bill pay and savings, right? Automatic transfers to a savings account and auto pay all your bills. Always look for free checking and free accounts. Shop around for insurance, cable, or other reoccurring expenses. This includes if you already have these items. Then you could use like the 50/30/20 budgeting method, where you spend 50% of your income on needs, you spend 30% on wants, and you save 20% of your income. Now, this 20% savings could include debt reduction if you have those high interest debts like credit card payments, student loan debt, stuff like that. You should also try to limit spending on housing, like rent or mortgage, to not more than 40% of your income. And of course, as you hear over and over and over, invest early and often, right? Try to put 10 to 15% of your income directly into a retirement account. Now that we've talked about all these different things and tried to understand it, what have we learned? Like, what are the key takeaways here? So, the state and stability of an individual's personal finances and financial affairs, they're called financial health. And the typical signs of a strong financial health include a steady flow of income, very rare changes in your expenses, strong returns on investments, and a cash balance that is increasing. To improve your financial health, you need to assess your current net worth, create a budget if you don't already have one, and make sure it's one that you can actually stick to. Build yourself that emergency fund, 3 to 6 months, all right? Then start paying down your high interest debts, whether you want to do the avalanche or the snowball method, and then pay down your low interest debts. And then, you move forward from investing more and more and more. So hopefully you guys, you can kind of start where you need to, assess where you're at, and move forward from there. And I hope you guys enjoyed this information. It helped some of you out. If you liked the video, subscribe. If you want to, smash that like button. But until I see you guys in the next video, y'all be safe.